Hello, ladies and gentlemen. Good morning to you. Trust you're having a wonderful moment out there, and how well are you preparing for the New York session today? Before we kickstart, I would like to get some feedbacks in terms of confirming that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get this started. Okay, so let's see what we have here. All right, my Gigi, good morning to you. Thank you. 4114, thank you very much. Hey, Carrie, good morning to you. Thank you. Cyprian 1987, thank you very much. All right, so I will be taking this as a confirmation that we are good to go this morning. I'm very pleased to welcome you to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you are welcome on board. I'm so glad and excited to have you guys around. And what we simply do here on a daily basis is to review the financial instruments that we have been monitoring since the beginning of the week. So what we do is simply choose random instrument. It could be a crypto, a currency pair, a commodity, or an option, whichever it is, we choose at the beginning of the week, and this will be the instrument we are going to be monitoring for the week. So we come here, we review them, we talk about how to manage our existing trades and how to anticipate a potential opportunity during the New York session. And I would like to state here that it could be a little bit overwhelming at first, since this is going to be your first time probably getting involved with this kind of setup. And I assure you that with time you get to understand how this works, and you will be able to use whatever informations you have gathered here to make your own individual and personal decision during the New York session. So on that note, I want to welcome you once again, and let's dive right into the business for today. Well, today is Wednesday, April 12th, and it's another very important day of the week for us, as we have a couple of macroeconomic events that everyone is looking forward to. And you all know that despite our technical positions on the chart, we still need some catalysts that will be driving price movement. And this catalyst most of the time come in the form of high impact macroeconomic event. So for today, we shall be focusing on events that will be affecting the pairs that we have been monitoring, like the USD, the pound sterling. And the first event that is coming up today will be coming up in about 2 hours from now, and that is the consumer price index for the US docket. And the previous data we have here is 0.5% compared to the consensus projection of 0.4%. So we are going to be looking forward to what the actual data is going to be like. Then we also have the consumer price index for food and energy year on year for the month of March, and this is an indicator to the inflation rate in the country. And what the consumer price index gives us is a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. Then also later on today, we are going to be seeing witnessing the Bank of England's governor is going to be having a speech, and everyone will definitely be looking forward to his monetary policy statements and how which will also give us a clue into the health situation of the US economy as well, which will also be something that everyone in the market will be looking forward to. Then later on today, I think in about 8 hours from now, we are going to be witnessing the FOMC minutes for the last month FOMC meeting, and this is released by the Board of Governors of the Federal Reserve, and this will also give us a clear guide into the future of the US interest rate policy. So this is another event that majority are going to be looking forward to, and we shall be seeing the reflection of the anticipation of this event on the chart as price action. So with that being said, here we want to be diving right into the chart so that we can look at things from a technical standpoint in order for us to be able to position ourselves ahead of the New York session. So as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil, we had been witnessing a choppy situation ever since that first sell position we took at the beginning of the week. And before we go into the details for today, I would like us to have a quick review of how the week has started for us on the US oil, and to emphasize that this is where the week started. The week started on a bearish note after witnessing a bullish gap here. So we saw rejection, we saw selling pressure around the $81 mark, giving us that area as the resistance line for the week. Then we also had a support line for the week at the $80.45 level, giving us a beautiful flat channel where price action has been caught within a little indecisive phase around that area. And you all know what we look out for whenever we have this kind of simple setup. We want to remain patient and wait for price action to either break out of the resistance line for buying opportunity, or the breakdown of the support line for selling opportunity. And in fact, the latter was what happened at the beginning of the week. So with our sell stop order below the structure, we had our first sell position for the week triggered below the $80.45 level. And price action moved about 80 pips thereabout in our favor before we saw the snapback into the structure. And as usual, what we normally do here whenever price action moves significantly well in our favor, we always move our stop loss accordingly to lock in some profit, so that whenever price action snaps back up or pull back, we are not going to be taken out at a loss situation. Then we also had another opportunity yesterday after we took advantage of the sell position right below the $80.45 level, which actually respected a theoretical technical position here. You all know from a technical standpoint that whenever we have a breakdown of a key structure like that support line that was broken on Monday, we expect that price action will at one point in time come back to do a retest of structure, and the sight of selling pressure below the $80.45 level will definitely welcome another sell position. And as at yesterday's live session, we were able to be part of the sell position here as we rode the move all the way to the downside, and price action moved about 100 pips in our favor before we begin to see the buy pressure resume here. And I hope you all moved your stop loss according like we always do to secure our position. At least you would have been taken out with some small profit, or at worst case scenario break even. And with the buy pressure that resumed here during the New York session yesterday, I hope you are able to take advantage of this move. Like I told us all yesterday, that if the demand zone that we identified here during the live session continue to persist, that is, if we continue to see buy pressure around that area, then definitely we want to be looking out for buying opportunity above the $80.45 level. And in that regard, we had a buy stop order there, which actually was triggered. And if you had that positions running, well done, and kudos to you for being on standby to have caught that move as you will currently be running with about 115 pips in profit. Now, you all know what we do whenever we have price action move in our favor like this. The next thing we want to be doing at this point is to move our stop loss accordingly to secure this current position. And with the look of things right now, I would advise us to be moving our stop loss to somewhere right below the $81.20 level to secure this current position, while we monitor how price action is going to be reacting to this beautiful consolidation phase we have been witnessing here since the later part of the New York session yesterday. So once again, well done to everyone who has been part of this profitable move. And what we are going to be doing now is to dissect the current market structure in order to be able to identify a potential trading opportunity for today. And another thing I would like to state here is that we should also remember that we are expecting a series of macroeconomic events today, which will definitely be having a major impact on the US oil price as well. And before we go into the details here, I would like us to scale up into the higher time frame so that we can have an holistic point of view of what has really been going on here for the last couple of months. Now, in that regard, let's scale up into the daily time frame of the US oil chart. And here we are on the daily time frame. Now, if you look at the structure here, we laid emphasis on the fact that price action has been bearish since the second half of last year. And to further buttress this bearish momentum, we connected the series of lower highs, which gave us this bearish trend line that you can see on your screen. Now, things got a little bit interesting in the month of since the month of November, as we saw our price action was trapped within a channel right within the $82 level, which happened to be a very, very strong selling niche in this market, which has lasted about 6 months on this market. Then we have the support line at the $70 mark, which was broken during the month of March here. And we have that, which this whole situation here further emphasized the indecision in this market. But the important structure we are going to be focusing on for this week, actually, which we also looked at the beginning of the week, was the situation here in the last couple of weeks. And if you recall, I made mention of the fact that the OPEC Plus decision made a decision a couple of weeks regarding cutting oil production. And because of the fact that this was announced, we saw the huge bullish gap at the beginning of last week's trading session, which gave us a sign that the oil price might likely skyrocket to the upside. But in the last 7 to 8 days in this market, we have seen a situation here where price action appeared to be trapped within the $82 mark and the $80 area to further emphasize that indecision in this market. So what we simply saw here throughout the course of last week and headed into this week was price action trading above the $80 level, but unable to find a new high that will give us a signal of that trend continuation to the upside. So we had a beautiful channel here between the structure, and price action still remains above that important key level at the $80 mark, which we said we are going to be using to guide our trading activity for this week. And what we said on Monday was that if price action continues to trade above the $80 level with continued buy pressure above this level, then we will be getting ready for buying opportunity, and a further breakout of the $82 mark will be welcoming more position to our existing trade. However, if price action ever breaks down the $80 mark, where selling pressure resumes below the structure on our lower time frame, we would have no choice than to join a sell-off in this market. Now, as you can see, since the beginning of the week, we have continued to see multiple rejection of the $80 mark, giving us a clue that buyers are still present in this market. So now, in order to understand how this is going on here, we need to scale down to a much more lower time frame so that we can see what structure the buyers have evolved into on the lower time frame. So scaling down into the 1 hour time frame, this was what we were able to identify at the beginning of the week, as we saw price action initially within that channel, which I emphasized. But one important key structure that we need to take note of, that we also laid emphasis on during the live session yesterday, was the fact that between the $80 level and the $79 area has been a strong buying niche in this market. And if we take into consideration what happened within the structure here since the beginning of last week, we can see here that every attempt by the sellers to break down that zone between the $80 mark and the $79.50 level has been met with strong resistance from the buyers. And this also happened during the early hours of this week as well. And if you look at what happened yesterday also, we saw buy pressure resume from this area. And if you recall vividly what I said about the structure here yesterday, I said even if price action breaks down the $80 level, we are not going to be adding another position unless we see significant confirmation that buttresses the strength of the sellers. And one thing I said we should be looking out for is a retest of the $80 level where selling pressure is identified below the structure on our lower time frame to give us more confirmation to sell. And if a significant breakdown of the $79.50 level at this point, a retest of that structure will definitely incite a huge move to the downside. But this did not happen. As you can see here, price continued to the upside, hereby respecting that demand zone one more time. And what this simply tells us is that buyers are still very, very strong in this market. And look at the bullish momentum here. It led into the breakout of that bearish trend line we identified at the beginning of the week, further emphasizing the strength of the buyers. And to further give us a clue of the strength of the buyers here, we finally had a comfortable breakout of that $81.20 level, which happened to have happened for the first time in the last 7 days now. So with the breakout of the $81.20 level, which happened to be a very strong resistant line in the last 1 week in this market, the question now is this breakout of structure a signal that we are going for another wave of bullish momentum? Will this breakout give us a signal that buyers are actually strong and we should be getting ready for that trend continuation that we have been expecting in the last 1 week? Well, if we look at the structure here, let me zoom in and take into consideration this impulsive move. So we shall be looking at a couple of expectations in this market. And the first structure I would like to emphasize here is considering this impulsive move that tested the $81.70 level. You would agree with me that at this point a retracement phase seems long overdue, as those who took advantage of the price at a very low level at the $79.50 level will at one point want to be doing some profit taking activity, which will reflect on the charts in the form of a retracement to probably a key structure before another wave of bullish momentum happens. Now let us talk about the potential retracement phase in this market first of all, before we go into the detail of the other perspective here. So now the first thing I would like to state here is that we might likely see a retracement. And if we are going to be seeing a retracement, how do we intend to take advantage of that move? Now, looking at what has been happening here since yesterday's New York session, we saw how price action has fell into a consolidation phase, which has transitioned rather into an ascending channel here. As you can see, after connecting the series of higher highs and higher lows in this market, we have an ascending channel. So if at any point in time we have a breakdown of that ascending channel, I want to be seeing this as a signal that we might be going in for a retracement phase. So what I'm simply saying here is, if price action breaks down the support line of that ascending channel and we cite a retest of structure, I will be looking forward to an opportunity to sell at the breakdown of the $81.44 level. Then more opportunities shall come in at the breakdown of the $81.20 level if selling pressure resumes again below the structure. And I'm of the opinion that our TP target for a retracement phase here could likely fall around that $80.45 level. If you look at this structure closely, it shares a confluence with that bearish trend line that was broken yesterday. And if you look at things from a theoretical perspective, we expect that after price action breaks out of a key significant structure like the trend line here, we expect that price action might likely come back, retest the structure, where the appearance of buy pressure above this level will be making us get ready to join the second wave of the bullish momentum. So this is my first perspective into a trading opportunity on the US oil. So we are looking forward to a breakdown of the $81.44 level to incite the potential of a retracement phase. Now, there's one thing I would like to state here regarding the breakdown of the $81.44 level. The position that will come in from below the $81.44 level will definitely be a counter trend opportunity. And if you are one who is not comfortable taking counter trend opportunity, or you are not a scalper, I would advise you to stay clear of this trade and just wait for the culmination of that retracement phase to join the second leg of that bullish momentum, which we said we are going to be looking out for around the $80.45 level, which also shares a confluence with that bearish trend line. Now, if price does not continue to the downside, that is, if price action does not break down the $81.44 level to incite a retracement phase, but instead continue to find higher highs, then we will have no choice than to get ready for a trend continuation to the upside. So in order to be able to capture that bullish momentum, if that is going to be what is going to be happening today, I have already identified a simple setup here that we can use to guide our trading activity. And if you look at what we have here following the previous impulse leg in this market, you will see that as soon as price got into the $81.70 level, we have been witnessing selling pressure from that area. And another thing that makes that area more interesting is the fact that it shares a confluence with the resistant line of that ascending channel on your screen. Now, to buy the US oil at this point, I would want to see price action break out of the $81.70 level, buy pressure above that structure to give me more opportunity to add more position to my existing trade. So this is what I will be looking forward to buy the US oil at this point. So another thing I would like to state here regarding the bearish momentum, that is if price action breaks down the $81.44 level, is the fact that when price drops below the structure, we want to be on standby to move our stop loss accordingly to secure our position, as we look forward to see how price action will be reacting to these key structures like the $81.20 level, the $81 area, and then the $80.45 level, as we could see buy pressure resume at any point when price action gets into that structure. So what we are going to be looking forward to when price ever gets into the structure is to cite reversal patterns, buy pressure on our lower time frame. Then we would have a clue that buyers are gradually gaining momentum at those points. So that is why I said that it needs a level of attention to be able to take advantage of this retracement to the downside, as you would need to be on the chart most of the time to monitor price actions and as well move your stop loss accordingly to lock in whatever profits you have made so far. So that is that on the US oil for today, and I hope you can screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. So that is that on the US oil. If you have any questions, let me know in the comment section below. So moving on now, we are going to be talking about the option US tech, which is the second instrument that we have been monitoring since the beginning of the week. Now on the US tech, we were fortunate enough to be part of a sell position at the beginning of the week. Remember that we had this channel figured out, which between the 13,090, which happened to be our resistance line for this week, and then we had a support line at the $13,000 mark, a very strong psychological level, where we had our sell stop order below the structure, which triggered our first sell position for the week on Monday. So we saw price action move significantly well in our favor. It moved about 140 pips before this bullish momentum began on that same day. Now, during the live session yesterday, we were around this area. During the live session, we saw this bearish impulsive move during the live session yesterday, and I told us all here that we need to be very patient in this market, as we don't want to be jumping into any bullish momentum at this point, as we still need some confirmation to happen. And the reason why I said we still need some confirmation to happen is simply because of the fact that price action has been bearish. If we consider what has been happening here since the beginning of this month, you will see that price action has been bearish after connecting the series of lower highs. We have this bearish trend line figured out at the beginning of the week. Now, with a breakout of the bearish trend line here on Monday, I told us all yesterday that let's see how far this bearish move is going to go. Is it going to line up with our theoretical expectation that whenever price action breaks out of a key significant structure like the bearish trend line here, that we might likely see price action drop into structure to retest that level in anticipation of another wave of bullish momentum? And with the look of things here in the last 24 hours, it appears that price action is gradually transitioning into that theoretical expectation. As you can see here, since yesterday's New York session, we have been witnessing buy pressure just right around where the bearish trend line is. And with a breakout of structure here, we might likely see this as a retest of structure in anticipation of a trend continuation to the upside. And if you also consider the strong demand zone here at the 12,850, you can see that every attempt by the sellers to break down that structure has been met with strong resistance from the buyers, and at the same time, sellers have found it very, very difficult to find a new low in this market. So at this point in time, I will want to consider this multiple rejection by the buyers as a sign that a bullish momentum might likely come in. So in that regard, let's acknowledge the fact that we could be having a temporary demand zone around this area. So what I will be doing right now is to acknowledge the buy pressure around this area by calling this our temporary demand zone, at least in the meantime, after which if price breaks down that structure, then we will be considering selling. But if price action remains above this demand zone, then definitely we have no choice than to look out for buying opportunity. So let me label this structure here, and then I will call it a temporary demand zone, as we are not, is not yet a confirmed one, as we still need an impulsive move to spring out of that area, or an engulfing candle to spring out of that area to further emphasize that area as a valid demand zone at this point. So right now we shall be calling it a temporary demand zone. And if you look at what has been happening here since yesterday, you can see that price has been consolidating just right around that area. And you all know, since we're expecting a macroeconomic event today, majority of the players in the market will definitely step aside from the market, and this will reflect on the chart as a consolidation phase, as they want to wait and see how the market will be reacting to this event in order to bring more liquidity into this market to drive price movement further in whatever direction we want to position ourselves. So right now, with a temporary demand zone identified around the 12,950, which also shares a beautiful confluence with the retest of that bearish trend line, I will be looking out for buying opportunity above the $13,000 mark here. So by having a buy stop order above the $13,000 mark seems most reasonable at this point. And then if a further retest of that structure happens with buy pressure, then we could be thinking of adding more position to our existing trade. then a further breakout of the structures as well, we will be welcoming more opportunities to add more buy position to our existing trade here. So these are the things we are going to be looking at to be part of a bullish momentum in this market. Now, one thing could happen here during the New York session today, considering the volatility that might come in following or prior into the macroeconomic event or after the macroeconomic event. We might likely see price action drop sharply down, striking out into the 12,950 to shake out a lot of buyers who are thinking of buying there, shake out a lot of people before that bullish move happens. So we don't want to get concerned about that. What we want to be doing is remain adamant that we are holding on to a buy position above the $13,000 mark. So please take note of this observation, as we might likely see a sharp breakdown of the 12,950 before the bullish momentum begins. So that is what we are going to be looking forward to here to buy the US tech. Now, considering a sell position in this market, well, for me to sell the US tech, I'm still going to be very, very doubtful about selling the US tech based on the current structure here, despite the fact that we have been seeing bearish momentum since at the beginning of this month. We can see here that sellers have found it difficult to find a new low. As you can see here, every attempt by the sellers to break down the 12,850, 12,900 zone has been met with strong resistance from the buyers. And for me, from a technical standpoint, I would rather see price action break down that demand zone to give me a confirmation that the buy positions here have been taken out, and to see if there is liquidity to drive the sell pressure. I want to be seeing some retest of structure happen on my lower time frame, hereby respected the bearish trend line that we identified at the beginning of the week to further push price to the downside. So this is what I want to see in this market for me to sell the US tech. However, if we look at the distance between that temporary demand zone here at the 12,950 and this demand zone here, you can see that we have a whopping 100 pips distance around that area. So the next question you will be asking is, are we going to be waiting for a whole 100 pips to happen before our highs before we now finally join that bearish move to the downside? That is a very, very good question if you ask me. But one thing I would like to say here is that we could actually take advantage of a bearish momentum even before the breakdown of the 12,850 happens here. And what do we want to be seeing on the chart to be part of that momentum? Well, the first thing I would like to see here is price action breaking down that temporary demand zone at the 12,950. And you can see if price action breaks down the 12,950 level, that zone here, there, it would also have broken down the bearish trend line. So you all know that we said at the beginning of the week that if price action remains below the bearish trend line, we shall be comfortable in a sell position. So if that becomes the case here, remember I told us that we could see a sharp breakdown during the macroeconomic event today before another bullish momentum happens. So because of this perspective, we are not going to be jumping right into a sell position, as we want to wait for a further confirmation to happen, which will reflect on the chart as a retracement phase, doing a retest of either the trend line or that demand zone, where sudden pressure will resume below the structures on our lower time frame. Then we could actually be part of a sell position even before the breakdown of the 12,850 happened. And if a breakdown of the 12,850 happened, then we could be thinking of adding more sell position to our existing trade on the US tech. So these are my view here on the US tech. It's very simple setup here, very easy to understand if you've been following me, and you can also screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this option. So if you have any question, feel free to let me know in the comment section. I will be taking my time to read the comment section from time to time to see if there are any questions for me. All right, I can see a comment from Cast. Cast wants us to do AUDUSD, though AUDUSD is not part of the instrument that we are monitoring for the week, but I will try to incorporate it if there is time. I will try to make sure there is time. Okay. All right. Tony Guyen, how are you? Good morning to you. 570. Good morning to you. Jankra Sentis, I don't know what you mean by spend. Okay. So in the absence of no questions here, I will assume that we're on the same page. So I will be moving on to the next pair. And the next pair I will be looking at is the, what is the next pair we are looking at today? I think it's the XAUUSD, right? Yeah, it's the XAUUSD, exactly. So on the XAUUSD, we have been quite profitable in the last 24 hours in this market. And we shall be going into the details of that let's quickly look at how the week started for us on the XAUUSD. So on the XAUUSD, we saw a situation here where price action started the week on the bearish note. And we started around the $2,008 mark, which happened to be our resistance line at the beginning of the week. We saw price drop down, breaking down that very key significant level at the $2,000 mark, which we all agreed on Monday that it will be serving as our yardstick for trading activity. And part of our agreement on Monday was that if price action trade below the $2,000 mark, we look out for selling opportunities, and if price action trades above the $2,000 mark, we shall be looking out for buying opportunity. And to further emphasize the strength of the sellers in this market, we connected the series of lower highs here, giving us this bearish trend line, which also was serving as a yardstick for trading activity. So on Monday, we said if we start seeing selling pressure around the $2,000 mark, we shall be joining the sell momentum, which we did, and price action moved about 170 pips in our favor before the bullish momentum began here. And during our live session yesterday, we had the situation here where price action had broken out of that bearish trend line for the first time. So you can see we had the trend line here figured out, and you all know what we look out for whenever price action breaks out a very key significant structure like this. We want to see price action do a retest of structure with continued buy pressure to join a trend continuation. And what makes that trend line very important for us yesterday was the fact that it also shares a confluence with that $2,000 mark, which happens to be our key level for the week. So we saw the breakout of the trend line here yesterday, and during our live session we already saw this happen, and I told us all that there is a likelihood that price action will come back to do a retest of that structure during the early hours of the New York session. Hence, I told us all that our stop loss will be somewhere right below the bearish trend line to secure our position. Now, see what happened afterward. We saw the retest of structure just as expected. We saw buy pressure resume and triggering our buy stop order just above the $2,000 mark. And at this point, we had our first buy position for the week. And in fact, price action moved significantly well on that first position as it moved over 200 pips in our favor. Then we also had the privilege of adding more position to our existing trade here, as I told us all yesterday that this resistant line here at the 2008 mark has been a selling niche. A breakout of that structure will definitely be welcoming additional position. So I told us to have a buy stop order above the $2008 mark. And as you can see, we had that buy position triggered and price action moved about 130 pips on that same position too as well. So we had a total of about 330 pips move in our direction before the sell pressure resumed around the 2020. Now, for those who are taking advantage of the buy position, well done to you guys for being on standby to have caught that move. And if you had moved your stop loss accordingly, you must have been taken out of your buy position at some considerable profit size on that move. So with the information we have gathered here on the 1 hour time frame, and considering the profitable journey we've had so far on the XAUUSD, what is going to be our plans for the new week. So all we need to do right now is to have a fresh new look into the market. As you can see that though we had a bearish momentum at the beginning of the week, but it appears that price action is gradually transitioning into a bullish momentum. And if you look at what happened here on Monday after the sharp rejection of the zone around the 1,989, we begin to see our price action had continued to find higher highs and higher lows in that regard, hereby breaking out of that bearish trend line, retesting the structure to give us a clue that we might be in for a very strong bullish move. Now, when we connect the series of higher lows in this market, what we see here is a very beautiful bullish trend line. In fact, I had a couple of trend lines to emphasize this. So we have a bullish trend line which the price has continually respected since the last 48 hours in this market. Now, if you look at the sell pressure that began here on this during the early hours of today, you will see that price is back into the $2,008 mark, which also shares a confluence with that bullish trend line we just identified now. And coupled with the fact that price action broke out of the $2,008 mark yesterday, lining up with a technical expectation that after a breakout of a key structure like this, price is likely going to come back and do a retest of that structure. The appearance of buy pressure above this level on our lower time frame will definitely be welcoming a buy position in this market. Then a further breakout of the $2,020 mark will be welcoming more opportunity to add more position to our existing trade. Now, you would agree with me at this point that we are at a critical point in this market where patience is hereby required. Price action in the last couple of hours right now has been oscillating right around that confluence there between the $2,008 mark and that bullish trend line. So we want to see how price action will be reacting to the structure to decipher what our next line of action will be. Are we going to be buying or are we going to be selling at this point? Now, the next question we want to be asking is, what do we want to be seeing from this current structure that will give us that confidence to buy the XAUUSD, and what are we going to be seeing to give us the confidence to sell? So let's talk about the buy expectations here first of all. So to buy the XAUUSD from the structure, we want to see price action respect that bullish trend line one more time, buy pressure above the $2,008 mark to further give us that confirmation. So what we want to see is something like this price coming into the structure. It could even break down the trend line a little bit, but the most important pattern we want to be seeing here is a reversal pattern where higher lows is duly identified to give us that leverage to join a bullish momentum to the upside. Now, to sell, what we are going to be looking out for to sell here is to see price action breach that bullish trend line. That is, price action breaks down the trend line, and at this point it will have been the first time price action will be breaking down the trend line, and this might likely give us a sign that the trend line may no longer be strong enough to continue to hold that bullish momentum. And if that happens, remember, we are not getting too excited at this point, as we still need to be patient enough to wait for a confirmation to happen, which is definitely going to be reflecting on the chart as a retest of the $2,008 mark or the trend line here to give us an opportunity to join that decline to the downside. Now remember, looking out for this retest of structure will definitely come in on a lower time frame. So as soon as we have a breakdown of both the $2,008 mark and the bullish trend line, we want to scale down to a much more lower time frame. It could be your 15 minutes, your 10 minutes, your 5 minutes time frame. Look out for retest of structure. Look out for signs that buyers are finding it difficult to climb back above the $2,008 mark. Then we can get ready to join a decline to the downside. So this is what we are going to be looking out to sell the XAUUSD today. So you can see how important the bullish trend line and the $2,008 mark is going to be for us during the New York session today. So let's keep this in mind as we want to see how price reacts to that level to give us an opportunity to trade. Now, in order to make things a little bit more easier for us during the New York session today, I want us to scale down to a much lower time frame. Let's see what is actually happening here. Do we have a pattern that can actually give us a clue into what to expect during the New York session? So scaling down into a much more lower time frame, I would suggest we use the 15 minutes time frame at this point, and let's zoom into the current structure. So remember, we have the $2008 mark here, we have the $2020 mark here. So let's readjust that one. Now look at the structure here. We have situation here where we have the first one here, buyers try to climb up, we saw price come back into the structure, and we begin to see some buy pressure resume around this area. So will this turn out to be a inverse end and shoulder pattern? So it could be something like this, where this is the left shoulder, the head, and probably we have a right shoulder here, giving us a beautiful reversal pattern where a breakout retest of the neckline will welcome a buy position here. So that is one perspective we can look at here. So if the buy pressure above the $2008 continues, we might likely be getting ready to join a bullish momentum. So in order for us to make things easy for the highs to spot an opportunity, let's project a neckline area right now so that we can be part of that move. So I think the $2011 mark seems most appropriate here. 2011, I guess. Yes, 2011. So let's label that level so that so we have the $2011 level. $2011 level, what a rhyme that is. So we have this given here, and then the top right hand side of our screen. Okay, I think this is good. All right, so we have something like this. So what we are going to be using to guide our trading activity for this week is for price action to break out, reach a $2011 mark, then we could join a rally to the upside. So you could have your buy stop order above the $2011 mark, just right above this wicks here, so that it can trigger our buy position. So if that happens, then our stop loss will definitely be somewhere right below the $2008 mark. That is a very small stop loss, if you would ask me. That's about 45 pips thereabout. Then we look forward to more opportunities at the breakout retest of the $2020 mark to add more positions to our existing trade. So this is how we are going to be buying the XAUUSD for today. However, if price action drops below the $2008 mark, like I mentioned on the 1 hour time frame, retest of structure, then we would have no choice than to start looking out for selling opportunities, where a further breakdown of the $2000 mark level will also welcome additional sell position in that regard. So let's be on standby for these opportunities. It's a very simple setup. Screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. So that is that on the XAUUSD for today. So we shall be moving right into I think the BTCUSD, I guess. It's the BTCUSD, I think. Hold on a second, please. Let me check if it's the BTCUSD. Hold on a second, please. Give me a moment. I want to confirm if it's the BTCUSD we treated next yesterday. I'm still here. Hold on a second. Miyagi, I see your comment. Thank you. How are you doing today? Trust you are doing well. All right. So I think it's the BTCUSD we are looking at right now. So the BTCUSD has been one of the most profitable trade for us this week, as we were able to scoop quite, I think, over 300 or 400 pips on that one. We shall be looking at that in a moment. Okay, so this is the situation we have here on the BTCUSD so far this week, and let me zoom in. So this is the 4 hours time frame so that we can have a clearer perspective into what is going on here. So we were part of this bullish move here right from the, hold on a second, please. Let me highlight this one out. So We were right from the 28,500 was where we joined the bullish move this week. As you can see here, price action triggered our buy stop order, and it moved about 200 pips on that first position. Then we also had the second position broken here at the 29,350 also, which also saw price move about the 120 pips thereabout before we started seeing this consolidation phase here during our live session yesterday. And we had some attempt by the buyers to actually break out of that resistant line here, had a $30,022 level, but we can see price still came back into the channel. So this channel still continues to hold pressure in this market, which is more or less a sign that there is an indecision in this market, and probably looking forward to the macroeconomic event for today, which will definitely give us a clue into where price might likely be going. And I made mention here yesterday how this channel could actually turn out to be either a trend continuation pattern or a reversal pattern at this point. So you all know what we look out for whenever we have a simple channel like this. We either want to see price action break out of the channel for trading opportunity, and in this kind of scenario I would rather see a breakout first of all, not jumping into conclusion by putting our buy stop order there right away. We want to see some confirmation to happen around this area to give us a clue that price will actually be going to the upside. So we want to see retest of structure in our lower time frame by pressure above the 30,220 to give us that confirmation to join a rally to the upside. And the reason why I said that we are not going to be having a buy stop order above the 30,220 level is simply because of the nature of the wick of these candles around this area. You can see those wick are giving us signs that sellers are very, very strong in that market. And if we look at the psychological aspects to this current structure, you all know that whenever price action finds a new high, it normally and usually takes quite a time before price action gets acclimatized with that level. And because of the that's fear around that area, there is a likelihood that we could be seeing some choppy situation happen, like consolidation phases, retracement phases, and which has already been reflecting on the charts as price action already. As you can see, there is this choppy situation that we have been witnessing here in the last 24 hours. So we need to be very, very careful, as right now the emotion of fear is very, very dominant around this area, as majority are not sure if this move will continue. So they are trapped within, not sure if the move is going to continue to the upside or probably it's going to crash anytime soon. So some people will definitely want to be taking some profit off their position, which will be reflecting on the chart as a retracement phase to the downside. So there is a high chance that price could retrace to the downside out of fear, and we also want to be part of that if it does happen. And if a breakdown of the 29,900 ever happens on this chart on our lower time frame, we look out for selling pressure below the structure here to be part of that move to the downside. And we already identify a potential buy window around this area, which falls within the 29,350 and the 28,600 area here, where the appearance of buy pressure around this area will get us ready to join another wave of bullish momentum to the upside. So that is how we are going to be looking out for selling opportunities here to anticipate the second wave of bullish momentum. And at the same time, this whole structure could turn out to be a trend continuation pattern, which I already explained earlier, that I would rather wait for a breakout happen, remain patient, not having a buy stop order there yet, wait for a retest of structure. It could even drop below the 30,220. But the most important pattern we want to be seeing is buy pressure resuming around this area so that we can be part of the trend continuation to the upside. So at this point, we need to be very, very patient. And for those who are still having an open position right on the BTCUSD, I hope you've moved your stop loss accordingly to lock in some profit here. And if I can remember vividly, what we had decided yesterday is to have our stop loss somewhere around the 29,800 area, giving room for price action to breathe. And let's see how far this is going to go. So that is my view here on the BTCUSD. I hope I made myself clear. If you have any questions, feel free to let me know right in the comment section. So now going back into cast suggestion on the AUDUSD. So I think I still have some couple of minutes to run through what our expectations will be like for the AUDUSD for today. So let's pull out the AUDUSD chart. So where is the AUDUSD here? Okay, so we have the AUDUSD right on our screen right now. And what I will be doing first of all is to have an holistic view of what is really going on in this market. Now right now we have the daily time frame right before our face now, and if we look at what has been happening in this market in the last 5, 6, 7 months, that is since the month of October, it is quite obvious that price action has been trying to gain some bullish momentum here. And you can see we saw this leg up, and then we saw price drop into this 0.6500 level, very strong psychological area there. And we can see buyers trying to negate all our $10 sellers to push price further to the downside. So we have not seen that yet. So buyers are still trying to hold their ground around the structure here. So the first thing we are going to be doing here is to bring out our line chart to acknowledge the bullish pressure in this market in the last 6 months. So we draw the bullish trend line first of all. Okay, so let's map that out on your charts. Then the next thing we are going to be doing is to acknowledge this consolidation phase that is going on right along that bullish trend line. And if you have always been following me throughout my analysis on this in this community, you would know that I almost always lay more emphasis on structures around a trend line. And oscillation of price action around a trend line has a tendency of going either way. We could have it respect the trend line to inside the second leg of the bullish momentum, and at the same time it could turn out to be a reversal pattern that will break down the trend line to incite a sell-off in this market. So that is why we have to be very careful around that area. So what we want to be doing here is to know the nature of the market structure here. Can it give us a structure that we can use to guide our trading activity? So the first thing I will do here is to look at what has been happening here since February. So we have a resistant line here at the 0.67900 level. What a beautiful psychological level to take note of there. So we have the 0.6790 level. So let's label this area 0.67900 level mapped out there. And then we should be having the support line of this somewhere around here along that trend line, which is about 66400 level. Let me identify this one first of all. 66400 level first of all. Okay, my Gigi, I see you. Have a wonderful day out there. All right, 0.6640 level here. So we have it right at the bottom hand side of our screen. So I still want to acknowledge this one to this lowest point here, which is at the 0.65800 area, 65800 level here. So when we bring out our candle chart, we begin to see things more clearly at this point. So we have this one here, which has been the lowest point price action has ever been in the last couple of months in this market. So I will be giving this a different color so that we can acknowledge the importance of that structure there. So right now you can see how things are playing out right now. So we have a channel between the 0.67900 level and the 0.65800. Now if we zoom at what is happening around this area, we are right along the trend line, which also shares a beautiful confluence with the 0.664 level. So what we are going to be doing right now is to scale down to a lower time frame and see how price action has been reacting to the structure to decipher if we are going to be buying or getting ready to sell. So when we scale down to the 1 hour time frame here, we begin to see things more clearly. And on the 1 hour time frame, what can you find here on the 1 hour time frame? So I would like to bring all this one into our view here, 0.6400 level. Okay, so we bring this one to in, and then we also bring this one into as well, so that we can all see what we are talking about. So this is the 1 hour time frame here, and since the beginning of this week, you can see our price has been bearish. So let's acknowledge the bearish by connecting the series of lower highs in this market. So now we have a beautiful trend line figured out at this point, and we shall be using this trend line to guide our trading activities going forward. So when we bring back our candle chart, we do some readjustment so we can see our price has consistently respect that trend line. Now look at the structure we have here. We have higher lows identified here too. So we've been seeing some bullish momentum begin to since the beginning of yesterday. So we've been seeing some bullish trend line around this area. So we have a bearish trend line. So you would agree with me that we are at a critical point in the market here, where we have a beautiful confluence between both the bullish trend line and the bearish trend line. So at this point in time, we want to know if we are going to be buying or selling. So a breach of this bearish trend line will definitely give us a signal that the trend line may no longer be strong enough to continue to hold the bearish momentum. Then we shall be getting ready to buy at that point. So in order for us to find things easy to buy, then we should have a platform that we shall be using to guide trading activity for today, and that is falling exactly around the 66750, I guess. Yes, 66750. So we have the 0.66750 there, 0.66750 level. So we shall be using this level as a guide for trading activity for today. So buying the breakout retest of the structure is very, very reasonable at this particular point in time. So buy the breakout retest of structure to join that reversal confirmation there. So a breakout of that line would have broken out of the bearish trend line to signal a bearish momentum to the downside. However, if price action continues to the downside in such a way that it breaks down this trend line, the bearish trend line to the downside, that is, breaks down the bearish trend line, then we might be in for a bearish move. We wait for a retest of structure. So this bearish trend line will continue to guide our selling momentum for this week. So if we are going to be selling the AUDUSD, the bearish trend line, the red line on your screen, is going to be our yardstick for that opportunity on the AUDUSD. So we look out for more opportunities, and a further breakdown of the 0.66400 level will be welcoming more sell position in this market. So it's a very simple setup we have here. So let's be on standby to catch that move. Cast, are you still around? If you have any questions, let me know right in the comment section. And I think on this note, I would like to call it a day here. So I wish everyone the best of luck during the New York session today, and trust you all have screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. And remember that we having the macroeconomic event coming up today, so ensure that you have moved your stop loss on all your positions, securing your position, as there is a high chance that we might be witnessing some huge volatility in the market during the course of the New York session today. So on this note, I wish you best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs that we have been monitoring so far has been doing in anticipation of the New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.